Good evening, everyone. Hope you guys had a nice day. Just came from another session. I'm going to give another 2 minutes, say 2 to 3 minutes for more students to join. I see there is some that's asking that they are on their way to join. So another 2-3 minutes, then I'll start the session. In the meantime, please comment your student number in the chat section. That is the only way we are keeping attendance at the moment. So it is extremely important that you do paste your or copy your student number in the chat section. Thanks, guys. Good evening, everyone. Once again, hope you guys had a nice day. Please remember to copy your student number in the chat section. Let's quickly discuss the pre-meeting notes, I think for one of the final times. If you haven't done so already and would like to do so, you can add, guys, please mute your microphones. It causes a lot of disturbance across the broadcast. If you want to, you can send me your name and module code to the WhatsApp number, and I'll add you to the WhatsApp group for the specific module. You will get all the notes on that group, as well as any communication of classes that we can arrange, ad hoc classes that we can arrange. So it will be very beneficial for you if you want to do that. One-on-one consultations. The program is quite full, so you are still welcome to log your one-on-one consultations. However, I'm not sure that we will be able to provide one-on-one consultations specifically, so we will group. If you have a problem, we will group you together with people that's got similar problems, and we can have a combined session. But nonetheless, post your problem that you have so that we can monitor it and see how we can best assist you in the limited time that's still available. Then attendance register, I've already spoken about. Please post or copy your student number in the chat section, and at the end of the session, I would really appreciate it if you can complete the session evaluation form. Okay, without any further ado, let's jump into the discussion. Okay, first up, last week's Cleaner.
Hi, Charles. Sorry, I just wanted to ask with the grouped one-on-one sessions, is that
Yes.
still only open to Western Cape students?
You know what we will try and do is see this whole facilitation process. And I'm just going to take a moment to clarify that is for the Western Cape region. Okay, so each region does their own facilitation, or if they have it. I don't know. I'm just part of the Western Cape facilitation team. So since there's already a lot of Western Cape students, we have to attend to the Western Cape students first, to make sure that the resources are spent per province as they are. So it depends on how big the groups are. But what we will do, if we see that there's a massive influx of questions relating to the same type of problem, I can always arrange with Adele and see if we can have a group session, meaning a group session as per normal, and then the invite will go out to everybody that has been attending. So then that is not limited to Western Cape students at the moment. But one-on-one consultations, unfortunately, that is just because the demand is very high. We have to look at the province. So if you have any other queries relating to that, or if anyone else has got queries relating to that, please send an email to the email address that I've provided when I send out the communication, and please ask that question directly to UNISA. So just lastly, on point 12, if after the session, please, guys, just complete the session evaluation form. Then, yeah, I was done with that. But let's quickly discuss the previous class. So, yes, I was going through that question and I was explaining it, but some of you located the question in the study guide. So that is actually the mock exam as per your study guides. So instead of me going through that again, I would like you to practice that question on your own. The memo is provided. If you have any questions, hopefully this session and the next session will sort out those questions. Or if you still struggle to grasp a concept, you can always make use of the one-on-one consultations, and we can see if we can attend to you one-on-one or group, and see how best we can assist. So I'm not going to spend much time on that question. I would rather than have you work through that question, and then I'll attend to a question that I'm not sure that everybody's got the solution, because that's not how you study accounting to start with. So if you have been studying accounting like that, I strongly recommend that you do not carry on that way. It is really the worst way to study accounting. Maybe it works for other subjects, but for accounting it doesn't, because then it only fools your mind in thinking that you understand a concept. And then when you get to the exam and you actually have to do that question, then you don't have that memo next to you to confirm your understanding, and everything will look new and you will doubt yourself. So it is really very important that you do not look at the solution. Rather do it incorrect and then mark yourself, because then you will learn from your mistake, as opposed to looking at the memo, because then you will think you would have done it correctly. And that thinking you would have done it correctly is really a very, very big misrepresentation of your actual understanding of the concept. So do not study that way. It is probably the best exam advice I can give for any accounting students. 100%. So just lastly, if you want to join that voluntary WhatsApp group, send your module code and name, please. So please, I need all of that information to be able to allocate you to the correct WhatsApp group. Okay. Guys, then, okay, so I've spoken about the question that we started with. Then we're going to carry on with the question for tonight. Let me just put it up on the screen. It is the one that I've shared over WhatsApp. Just quickly want to locate it here and open it. Okay, guys, I'm going to run a bit. We are pressed for time, and I really want to spend time on concepts. and hopefully put you in a position to ask questions, because if you ask questions, then I can address them now, because we're not always in these sessions. So you have an opportunity now to ask your question that you wanted to ask in a one-on-one session. So this session is also free for questions, and participation is highly expected and appreciated. So please participate. So if we look at the question on the screen in the exam, if this lands on your table next week, you immediately go to the required. You don't read through it. Don't read through the question first. I always say this, and I will harp on that, because you are going to focus on the wrong things. Go to the required, pay attention to the dates, and ensure that you clearly understand what they want and for when do they want it. So they ask, prepare the asset section of the statement of financial position, only the asset section, as well as the relevant notes to comply to the requirements of the Companies Act number 71 of 2008. Now, before you even look at the information, I haven't looked at this question's information at all, so I'm going to go straight to where I would have done the answer. I'm going to open an Excel sheet on my side. If you have rough paper on your side, please participate and do the question. So first, take note of the required. They ask the asset section. So you will say, let's look at the required quickly. The asset section of the statement of position of all limited. So you will say all limited statement of financial position as at 31 December 1990. At 31 December 1990 or 19.9. Okay, so there's your headings. They ask only to do the asset section. So let's line the items that can be in the asset section. Okay, you know that the statement has got a skeleton, and you can with 95 probability say what will be in there and what won't. Okay, so you immediately jot this down. There will be non-current assets, and you leave about 5 spaces open. So let's say 4 spaces, and you say current assets. What is the current assets? That's always there. Trade and other receivables, cash and cash equivalents, inventory. Leave another 2 lines open just for in case there might be something else, and then you have total assets. Total assets. So there's your first section. There's a section. Okay. And that's the final total assets. Okay. Then the second part of the required says the notes to the financial statements. We do not know what notes there will be, so we can't foresee that. We can predict that there will be questions for notes for those. There's always, but we don't know at this stage. And then that will be your front page. Okay. Now you start with your calculations. Very important. Let's quickly have a look at now the information. Dates, very important. They're giving us the following list of balances as at 31 December 1990. So let's carefully read through them. And remember, these amounts are going to be in your answer, so they are going to count marks. So go and put them where they belong. So here we have inventories, 240,000. Let's go to inventories, and these you can either do in a calculation or on the face, but in brackets so that your examiner can see that this is a calculation. So we have inventories of 240,000. We have loans. Do we have to do loans? No. We have trade and other receivables of 36. We have trade and other payables, that is a liability together with loans, liability. Provisional tax payments, those are just tax payments that's already been made. We need to determine whether we paid too much tax or too little, because it's either then an asset or a liability. Dividends payable is a liability because we. Is there a question? Okay. Dividends payable is an indication that I've declared dividends in a previous period, but I have not yet paid for it. Deferred tax is a credit, liability. Bank is a debit, cash and cash equivalents. 75,000. Retained earnings is equity. Long-term loan, liability. Uviwe. Is there a question, guys? I saw a hand. Okay, cool. Then I have a long-term loan, that is a liability. I have land at valuation. There we can start, that's an asset. We have buildings at cost, and the moment that you start seeing these items, buildings, machinery, motor vehicles, accumulated depreciation, you need to know immediately in your answer, there's going to be the note, there's going to be the property, plant and equipment note. What does that note look like? You must immediately in your mind be able to see that the layout of that note so that you can draft your skeleton. Opening carry amount. We get that by.
I think on the yes, you mixed up the figures on inventory and trade receivables.
Say again, Sitabiso.
You mixed the figures. 240 is supposed to be on the inventory.
Oh, thank you. Thanks. Okay, opening carry amount, we get that by using the opening cost and the opening accumulated depreciation. Then we have the movements for the year. Movements for the year can be anything as additions, Mr. or Mrs. Reddy, can you please mute your mic? Thank you. Disposal. The mic is again unmuted. Please mute your mic. Disposal, depreciation, revaluation. Okay, then we have the closing carry amount. And remember, the closing carry amount is the amount that will go to your face of your statement of financial position. We get that by using the closing cost and the closing accumulated depreciation. Everybody happy with that? Then we have to decide or identify the number of assets. So let's go back to the information. We have land, buildings, and machinery and motor vehicles. We have land, buildings, machinery, and vehicles. And there will usually be a totals column. Everybody happy? Any questions so far? And you see that is just the layout of your note. You haven't read through any information and you already know where you have to go put the information. So it's extremely important that you have an absolute understanding of the layout of your question, of your answer, especially when it comes to the statement of financial position and any of the other financial statements. Okay, so there we have those values. Let's go back to the information. They say here we've got land and buildings at valuation, but I see no date there, so that means that is at 31 December. So what I would have done, I would have said land at valuation closing, buildings at cost closing, machinery and equipment at cost closing, motor vehicles at 31 December 19.8 opening. So motor vehicles is shown at opening. So I can already go and put motor vehicles there. Accumulated depreciation. Machinery and equipment closing. Where can I go and put that? Closing accumulated depreciation for machinery. Everybody happy? You see how you have to go pick the information and put it in. You already scored that mark, and it was really no thinking involved. It is just keeping a level head in the exam, and don't let exam stress take over logical thinking, because you're already saying to yourself or telling yourself that this is going to be difficult. I'm not going to be able to see what they want or what to do. Yet there's marks staring you in the face, and if you count all those easy marks together, you're already passing the question. So always remember that. Reading is very important. Motor vehicles, again, 19.8. That tells me opening. And that's motor vehicles. And then there's investments, the last one. Investments is always part of non-current assets. So let's go to the layout and we say property, plant and equipment. Here's my notes. That is note 1. And I've got investments. I don't know if there's any changes yet, so I'll just put 136 there. So this will be note 1. Everybody happy? Okay, that's note 1. So now we've allocated most of the amounts that we need out of this information. Let's go read the additional information. Just give me a moment. Before I carry on, are there any questions so far?
Yes, Charles, just a question with deferred.
Oh, sorry, Mrs. Carpenter.
Yes, just a question with deferred tax. What would be the scenario if it was debited?
Then they would have told us it's an asset.
Okay, and then
That means, hey.
So what would be the situation then if it was asset? That would fall under your
non-current asset.
Non-current. Okay. Thank you.
100%. So let's quickly go over the information. So inventory, they say, is valued at the lower of. Hi, Sitabiso.
I just want to find out, is the 310 for motor vehicles at cost, not for the end?
Sitabiso, I'm struggling to hear you.
I'm asking about the motor vehicles. It says it cost at the beginning, and then there's 310. That is on the. Is it for the closing?
Yeah, that 310 is for the closing.
Okay.
Okay. Then they say, okay, so inventory is valued at the lower of cost or net realizable value, and then they give us the what inventory is, what inventory consists of. Okay. So do you guys agree with that content? According to IAS 2, raw materials, finished products, consumables, and work in progress are all qualifying inventory items. Remember, not trade inventory, just inventory in general. Everybody happy? But why are they giving it to us if it's all correct then? It's for disclosure purposes. And look how easy this is. Let's say in the exam you don't know what comes first and what comes last. So let's just say make that note 2. As long as that note 2 goes to note 2. You say note 2, inventory. And you say raw material, finished goods, consumables, work in progress. And you've scored 1, 2, 3, 4, 5 marks. Don't leave out the easy marks. Back to the question. Number 3, the long-term loan. So this is now giving us more information what is here. Because all these items, they don't all give us debits or credits. They don't tell us if it's a debit or credit. So we need the extra information. The long-term loan was incurred on the 31st of August 1903 at an interest rate of 20% per annum, and the capital portion is repayable in 5 equal annual installments of 30,000 Rand each, beginning on 28 February 1907. The loan is secured by a first mortgage bond over land. So why is that information important? Because it's secured over a first mortgage bond over land and buildings. So if you do your if you do your note to the property, plant and equipment, you have to disclose that, because remember, people outside of your company are going to look at these financial statements and make decisions. So if they see land and buildings, they're going to think it's the company's assets. But if we've used land and buildings to secure a loan, it means that in the event that we are not able to repay that loan, land and buildings can be sold to repay that loan. In other words, land and buildings are actually tied. It's not when this it can't be counted as additional security. So it might influence the users of the financial statements, and we need to disclose that information. We need to make a note here of saying land and buildings comprise we don't know yet where it is, so I can't really say. So, but we say what does the information say? The loan is secured by a first mortgage bond over land and buildings. So land and buildings are used as security for the loan of security for the first So let's leave that information there, because we can always elaborate a bit more if more information is given. So that is the loan. So loans, we're not really sure that. I think this is the long-term loan that they're referring to. Long-term loan. There's the value. It's 150,000. So we can say that first mortgage bond 150,000. It's basically just to put information there that you know that the loan should be tied to land and buildings. It doesn't matter what you say or how you say it, as long as you can prove that you know that that information is relevant to the note to property, plant and equipment, specifically on land and buildings. Here they give us a bit more details on the loans. So that is now these loans. They say first, loan to tram limit. So loan to. Very important, because that means that loan is an asset. So let's read the information. Loan to Tram Limited. This loan was granted on the 30th of June 1919 at an interest rate of 15% per annum, and no security was provided. Okay. So very important, we need to be able to show the correct value. 30 June 1990, so that's in the current financial year. If I'm not mistaken, yeah, it's in the current financial year. Then no security was provided. Then they say loan to parent. The loan was granted on the 1st of January 19.5 at an interest rate of 12% per annum, and Toll Limited provided security. The loan fluctuated between 70,000 and 100,000 during the year. No fixed terms of repayment was agreed upon. So it's to the loan to the parent. So let's go to our non-current assets, loan to parent, 90,000. You can actually put already in. And we will have to provide a note, because we need to tell what that loan refers to. Okay. And if we look at disclosure in terms of financial instruments, it is very specific what we need to say there. We need to give the information as presented there. So we need to say it fluctuated between 70,000 and 100,000 during the year. In our note, let's go to our notes. Note 3, loan to parent. We have to give them details of the loan. The loan was granted to Toll Limited on 1 Jan 19.5, and you basically just give all the interest. The highest outstanding balance during the year was 100,000. No fixed repayment term was decided, was agreed upon. Interest is calculated at 12% per annum. Everybody happy with that? Another easy marks. You just need to know what your disclosure needs to be, and that's easy marks right there. Okay, so we've discussed the 90,000. Let's quickly have a look at the loan to Tram Limited. I just want to see what the amount is. 20,000. So the year we sit with loans 110, 20,000. This is a loan to Tram Limited. Loan was granted. We have that amount. So where should that amount go to?
It should go under investment from subsidiaries, because if you look at the investments, Tram is one of our subsidiaries in terms of the investment allocation.
100%. Okay, so let's quickly go to that part. Point 8. 60,000 ordinary shares in Tram Limited at a cost of 60,000. The issued share capital of Tram Limited consists of 80,000 ordinary shares each, and it has one vote. The market value of the investment is 60,000. So it means the market value of the investment is 60,000. So that investment in Tram is the 60,000 plus the loan that we've made to that subsidiary. So let's go to our answer, and under non-current assets, we say investment in subsidiary. And we say that is now 1, 2, 3, 4. So that will be the 60 plus the 20. Everybody happy? If you got questions, you must please stop me and ask, okay? Okay. What disclosure should that be? we must basically just tell them what we did there. So we say note 4, investment in subsidiary. We say the shares at cost. There's 60,000 ordinary shares. And the market value is 60,000. And the loan to Tram, that gives us our value. Everybody still happy? Okay, so let's carry on then. So we dealt with number 4. Let's go to number 5. Land and buildings are owner occupied. Why do they say that? Why is it important to know why are they saying owner occupied? Because if it didn't say that, you could have, or you should have thought of IAS 40, investment property. Because investment property...
Because it can also be an investment.
Yes, because IAS 40 specifically excludes owner-occupied property and are situated on Erf 10 Sunnyside, Pretoria, and comprises a factory building and a shopping centre. Let's use that information in our answer. I'm going to try and split the screens a bit so that we can have a bit more, see a bit more.
Sorry, Charles.
Who's asking a question?
It's Harry.
Hi, how are you? Harry, I hear you. There's lots of noise.
Can you hear me now?
It's a bit better, but there's lots of distortion.
Sorry. I want to talk about the investment that
Hi, Charles.
Hi, Tuna.
Sorry, I didn't quite understand the part where you said that if it wasn't stated that it was owner occupied, what would have happened?
Okay, so not specifically saying that anything else should have happened, because we would have identified that we are using that property. But just remember, when it says owner occupied, it means we as the company, this company is using that property in its trade. When it doesn't say that, it means there is no information that can state that we are the ones using it, and then IAS 40 can be applicable, investment property.
Okay.
Because remember, investment property is applicable to all assets that's not owner occupied, that is kept for capital appreciation or for rental income. That's IAS 40, investment property.
Okay, thank you.
100%. Harry, I didn't get your question. If you want, you can type it in the chat section, and then I can maybe have a look at that question for you. Okay, let's quickly carry on there. So there it just gives a lot of information about where it's situated, and that is important information for us. So we need to say here, if we go to our land and buildings note, land and buildings are used as security. We've got that, and then we say land and buildings are situated on Erf 10 Sunnyside, Pretoria, and it's a factory and buildings. Then they say the land was acquired on the 1st of March 19.4 for 240,000 and was revalued for the first time during April 1990. In other words, the current year, by Mr. Paul, a sworn appraiser. Let's open this again. I can't see properly. So it was revalued in the current financial year by a sworn appraiser, and okay, buildings was erected during 1990, and it was completed. Okay, so I just want to stop there first. I want to first look at land. They say land was purchased on the 1st of March 19.4 for 2040, and the first revaluation took place in the current year. So let's quickly go. I just want to open our answer because we're going to go to land. And let's look at the value they give here. Land at valuation, 400,000. So that means a quite substantial evaluation took place in the current year. Agreed? We will say the closing value is 400,000. There's no depreciation on land. There was a revaluation of 160,000. Nothing took place under those items. And now we can determine what the opening cost was, and that was 240 because it's given. Everybody happy with that?
Yes, we are.
Thank you. Okay, so we dealt with the land, and then let's go look at the buildings. Sworn appraiser. Buildings were erected during October 1990 in the current year. It was completed on 31 October 1990 at a cost of 420,000 Rand. No depreciation is written off on land, but it is company policy to revalue land every 3 years at replacement value. So there is 420,000 Rand that we that was for the buildings. So let's go to our information. So we know that buildings in the beginning had no value. There weren't any buildings because it was erected in the current year. So additions, 420,000. We don't know anything else yet because they only say that land doesn't carry depreciation. They don't say buildings doesn't. Other non-current assets are depreciated at the following rates and methods: machinery, motors and motor vehicles and buildings. So machinery and equipment at 15% using the straight line method. Motor vehicles is 25% using the reducing balance method. In other words, we first have to deduct the accumulated depreciation from the cost before we can apply the 25%. And the same with buildings, 2% per annum using the reducing balance method. So let's stay with buildings. Nothing else happened with buildings. I already spoke about it. Harry, I got your question. Thank you. I'll get to that. So there were no disposals, but there were depreciation. And depreciation is, so let's go calculate depreciation under calculations. So let's say depreciation. And the first one up is buildings. So buildings is at 2%. So let's say cost. The cost was 420,000. Depreciation at 2%. How many months? When was it completed? It was a
2 months.
irregular.
October.
Hey,
3 months.
2 months.
October, so it's November and
From
December.
November.
2 months.
Yes.
Everybody happy with 2 months?
Yes,
It's
3
2
months.
months.
Yeah, so
2
it's
months.
November because
Everyone.
it was completed 31 October. So it was in full use November and December. So it's 2 months.
Yes.
So it's that times 0.02 times 2 over 12. $1,400. And let's go to buildings, and we say depreciation is minus 1,400. And buildings are not revalued. Everybody happy? Let's just quickly attend to Harry's question. We didn't include it yet, but we would have seen it at the end. Investments is an asset and should be included in the information. On the face of the financial statements. But you must be very careful because you need to take in all of the information into account. So let's park investments for now. We'll get to that. There's some information in the given information that we need to take into account. So machinery and equipment. Okay, so we dealt with buildings. Let's go to machinery and equipment. Point 7. The only other transaction regarding non-current assets apart from the transaction in note 5 is the following. On the 2nd of January 1990, a motor vehicle which originally cost 40,000 and on which depreciation of 24,000 was already written off was traded in on a new vehicle costing 70,000 rand. So on the 2nd of January. Let's quickly go to the calculations and we say, so that's buildings. Let's go to motor vehicles. So let's work with the sold asset first. Sold vehicle. What was the original cost? It had an original cost of 40,000. Original cost. And it had an accumulated depreciation of 24,000. So that means the carry amount 16,000 rand. So the depreciation at 25% for the full year, because it was on the 2nd of January, which we can count as a full month. So that means the carry amount at date of sale equals 16,000 minus 4,000. So there's two very important principles here. You need to determine what was the carry amount of that vehicle on the date that it was sold. Should this line have happened?
No.
Thanks, Lena. That
I
line
don't
should
think
not
so, Charles.
have happened because we are selling that vehicle on the 2nd of January. In other words, that's still a full month and then a full year as well. In other words, we didn't use that vehicle at all. So that will be the carry amount on date of sale. And that value needs to go to your property, plant and equipment note under disposals, because disposals are always shown at carry amount of that asset that you are selling, and that's minus 16,000. Everybody happy with that? Okay. But a new vehicle was purchased for 70,000. New vehicle. Is it necessary for us to calculate it separately? Because we can work with the closing cost. If you go to the information, they say here they've got motor vehicles at cost, so it's 280,000, and then they have the at cost closing. So are you guys happy that we can use that figure?
Only because we bought this new vehicle early in the year.
Yes. If that vehicle was purchased during the year, then we should have taken that into account first. But since they are giving us they say the vehicle was purchased at the beginning of the year, we can take that amount as is, because we can assume that it's already been taken into account. But you can calculate it. Let's get my calculator here open. But they say there that the opening balance was 280,000. Then we sold the vehicle, and then we added a new vehicle, 310,000. So we can work with the 310. Accumulated depreciation. Here we must just be very careful to read the information correctly. They give us the motor vehicles depreciation in the beginning, accumulated depreciation at the beginning of the year, as well as the end. So we must be very careful not to miscalculate that, because we should remove the accumulated depreciation of the vehicle sold. Everybody happy with that? I think I'm going to give you guys 3 minutes just to make sure everybody's participating. 3 minutes to calculate for me the depreciation on motor vehicles. I'm going to mute on my side. 3 minutes. Can anyone give me an answer?
Just 2 more seconds.
100%.
I have 63,500.
100%. We'll check now.
I have
Thank you,
I
Jasmine.
have 60,500.
Okay, let's quickly check. So remember the accumulated depreciation, we always want to use the opening balance.
I have
So it will
37.
be, aye,
I get 37,667.
okay, let's quickly check. 80,000, you always work with the opening balance, because remember, how did we get the cost? Or how did we get to that cost? We said it was the 280 minus the 40 that we sold plus the 70 that we bought. Okay, so we need to do the same thing with the accumulated depreciation. We must subtract the accumulated depreciation of the vehicle that we've already sold. The vehicle that we've sold. And that total accumulated depreciation was 24,000. So it is the 80,000 it's 56. So carry amount equals 310 minus 56. The depreciation at 25% will be that amount times 0.25. What did we do wrong?
You added the formula. So you said 310 plus 56.
Hmm?
That's why
Sorry.
we get.
Sorry, my bad. Okay, 63,500. Who said 63,000? Just me. So if you got 63,500, that is the correct answer.
Charles, can I ask something?
Yes, Ollie.
If you would separate it, let's say you calculated the new separate, you calculate the sold and the remaining, because that's what I did. But I got three different answers from what I got. Then I minused the sold asset for 4,000, which I got the 63. But it's just that I did it a bit different from this one. So either or, is it okay, or you need to stick to what you are given?
As long as you can get to the 63,500 in a way that you understand and you apply the principle, then there won't be a problem in your calculation, as long as you can show the calculation.
Oh, okay.
And the main principle is you have to take the cost less the accumulated depreciation and times it with your
Charles,
yes.
I just have a question. Because in the statement before, we were given the accumulated depreciation at the end.
Yes.
So is what we did correct, because we're supposed to work with the accumulated depreciation at the beginning.
We always have to work with the accumulated depreciation at the beginning.
Isn't the accumulated depreciation that we have here the value at the end?
Remember, they can still test you to make sure that you are using the correct value.
I'm not sure if we're understanding each other. Can you please go back to the question?
You want to use that value.
That value is the value at the end. You can't use that to
No.
account for the reducing.
No, because it
So,
already includes the current year's
yeah,
depreciation.
So the 80,000 in the bracket, was that them trying to show us that that was from the beginning?
Let me just show you something on my, yes, that's the beginning, that's the opening. I'm
The
going to show you another calculation here quickly. 109,500, I'll show you now. Okay. Not sure whether I can make this smaller so you guys can, okay. So we have the 80 now. So let's say 80,000 minus the 24,000 that was sold gives me 56. What is the difference between 56 and 119,500? You happy with that? So that's another way to get to the 63,500. The 119 already includes the current year's depreciation, so you can't use that. The 80 you can't use as is because you still need to deduct the accumulated depreciation of the asset sold, because that is the value as at 31 December, and we sold that asset on the 2nd of January.
I think I was just a little confused because the 80,000 was placed next to the end date. But okay, I understand. Thank you.
It can be tricky because you it's not always you used to it being like that. It is a bit different.
Okay, thank you.
There were no revaluations, but there were additions of 17.
Hi, Charles.
Yes.
Charles, can I ask, why
Yes,
are we removing the depreciation on the asset that was traded in of 24,000 from the 80,000 opening balance?
that 24, because that 80,000, okay, so the asset that was sold accumulated depreciation together with all the other vehicles up until 31 December 19.8. So the moment that you sell that vehicle, you also need to remove that vehicle's accumulated depreciation from the total accumulated depreciation. Otherwise, you will be reducing.
That depreciation was for the previous year, 19.8, the 24,000.
Just remember, it's not depreciation, it's accumulated depreciation. So accumulated depreciation referred to a few years depreciation. Remember, accumulated depreciation.
Yeah, I hear you.
Yeah.
Yeah.
So
because the way I'm reading it.
Yeah.
Sorry, continue.
So they say the total accumulated depreciation, in other words, let's go to the question. They say here, the only other, okay, so on the 2nd of January 1990, a motor vehicle which originally cost 40,000 and on which depreciation of 24,000 was already written off. They don't say just in 1 year. They just say already written off in total was depreciation, was traded in on a new vehicle costing 70,000. So the total accumulated depreciation was 24,000.
Okay.
If they said depreciation written off in 1 year, then it would have been a different story.
Oh, I see. Okay. Thank you.
100%.
Sure.
Okay. And that was the only other information, that only other movements that was made during the year. So let's quickly finalize this. So machinery had no revaluations, no disposals, anything. It just had depreciation, and the depreciation rate is 15% on cost. So depreciation is whatever the opening cost will be. We're going to put that value in there now, because let's put that value in first. Let's go to the information. So we know that here where they say machinery and equipment, there were no changes to that value. So 55,000 stay as is. So 55,000 and accumulated depreciation we will have to calculate for the opening.
Sorry,
Okay.
Charles.
Yes.
Charles, the 50 accumulated depreciation.
Yeah,
The 50
that's the 55,000 is accumulated depreciation.
Sorry, I looked wrong. Thank you guys for helping. So 250 and 55 is the closing.
Hmm?
Okay. Clint, are you happy?
I'm just not sure about the 250. Was that the cost at the end? Yeah.
31 December 1990. So if there's no date next to it, it is closing.
With you.
Okay. So the depreciation will be negative 250,000 times the depreciation rate of 15%. There were no revaluations. So the opening balance would have been the 250,000 and the accumulated depreciation would have been the 55,000, but we reduce it with the 37,500 that we have in the current year. So it's the 55,000 minus the 37,500. So that would have been the opening balance for accumulated depreciation on machinery. Everybody happy? Because if that's the opening and that's the current year, then we should get to 55. So buildings at a cost of the 420 and accumulated depreciation of 1,400. Let's look at vehicles. Vehicles had a cost of 280. Then we sold the vehicle of 40 and we purchased the vehicle of 70, so 310. The same with the accumulated depreciation. I know they give us the answer, but it's the 80,000 less the I'm just putting a plus, but it's a less because it's a negative amount, 24,000, and further decreasing it or increasing the accumulated depreciation with the current year's depreciation. And then we get the amount as per the statement above, 119,500. Everybody happy? And that value is the value that goes to my statement. Everybody happy with that? Any other questions on this note?
Charles, can you hear me?
Hi, Harry, I can hear you.
Yes, Charles. On that one of, I think it's a depreciation for that one of you said 3 months. The building were erected during October. What if it was on the 7th of October? Because it didn't specify a date there. He just said during October. That is why I am having an argument that it can be 3 months, not 2 months. What can you say on that one?
they say here it was completed on 31 October, and IAS 16 say you start depreciation once an asset is ready for use.
Okay.
So it was ready for use on that date.
Okay, thank you very much.
100%. Okay, so we're done with that note. Let's quickly go to the question paper again. Okay, so we were still busy with investments. So we have 20,000 preference shares in Troc Limited purchased for speculative purposes. What does that mean? What does that tell us?
It's being held for trade, which makes it a current asset.
100%. The moment that you purchase shares for speculative purposes, it is the same, you treat it the same as you would have treated inventory. Because why do you purchase inventory? You purchase it to sell it. Why did you purchase those shares? You purchased it to sell it. So speculative purposes. So that will be part of my current assets. So we're going to say here financial asset at fair value through profit and loss. And now we need to calculate the correct value. We say here the issued share capital of Troc Limited consists of 200,000 ordinary shares and 40,000 preference shares. Each ordinary share has one vote. The shares of Troc Limited are traded on the JSE Stock Exchange, and the market value of the preference shares at the end of the year amounted to R2.30. What would the value be of our 20,000 preference shares? And that will have a note. Note, let's say 5. Let's go to note 5. Everybody still happy? Financial assets, so we will say the first one will be the current shares, current assets. And that was the 20,000 preference shares in Troc. Troc Limited at fair value. The last 30,000 ordinary shares in Lorry Pty Limited. The issued share capital consists of 400,000 ordinary shares, and each share has one vote. The directors value the shares at R1 each. These shares are classified as assets at fair value through comprehensive income, not held for trading. So that makes it a non-current asset. So in the note, non-current asset, there you will say 30,000 ordinary shares in Lorry Limited. And that will go to that investment, 30,000. Everybody happy?
Sorry, Charles. What
Yes.
happened now to the 136,000 that we initially had for investment, the one that's on the statement?
So remember that value that was given. They now say the investment consists of. So that investment is all of these items added together. So if you say 60,000 plus the 46,000 is 100, it's 106 plus the 30 is 136. But what we now did is we've broken it apart to see what does it really consist of. So we saw that 60,000 relates to the investment in the subsidiary. 20,000 relates to a short-term investment, in other words, a current asset held for speculative purposes, and 30,000 was a financial asset.
Okay, thank you.
So we took the full 136 that Harry had a question on, and we split it into three parts: investment in subsidiary, held at fair value through profit and loss, and the last one was the financial asset at fair value through comprehensive income. So I'm just going to say in the investment, let's say financial asset rather. OCI. The accountant neglected to make a provision for tax for the current year amounting to 60,000 Rand. We will see where that comes in now. Okay, let's quickly have a look at our answer. Okay, so we have inventory, so we still have to calculate cash and cash equivalents. Let's quickly have a look at cash and cash equivalents. Bank is 75. There were no notes of the 75, so I just need to correct that. No additional information on that. Trade and other receivables. No additional information was given on that, so it goes in as is. That's the final answer. Everybody happy? Guys, please remember to post your student number in the chat section. That is the way we keep track of the demand as well for these classes, as well as our attendance register. And if I can ask you a favor, if you can please complete the session evaluation form that's in the chat section, but I'll quickly post it again. If you can just give me some time. I'll give you guys the link now.
Sorry, Charles, are you going to post this solution in the group?
I will post it in the WhatsApp group.
Charles, I'm not happy about that one of investment again. When I add them together, they don't give me 136. Or maybe I made a mistake.
Let's quickly have a look. Let me unpack it for you.
Okay.
Okay, so they say the investment was 136. Okay. Okay, can you guys see? So if let's go to the question. Now we're going to investments. Yeah, they say. Okay. So the way they show it, they say it consists of 3 parts. First up is the 60,000 shares that cost 60,000. Okay, so there's the 60,000. Then they say there were 20,000 preference shares, so there's the 20,000. But that's the 20,000 shares at R2.30. So that equals 46,000. And then lastly, they say 30,000 ordinary shares at R1 each. And if I add all of them together, it gives me 136.
I think the way we wrote it in the statement was a bit different.
Remember, this was given. That's given. We're not saying it's correct. We need to go as accountants, we need to go and use the information and then go allocate it. They're showing us how they got to it. So they just went and they plonked in 136 as investments. Then we went and we said, no, we can't, you can't do that. The 60,000, we will now go and take further. We will add the loan to the subsidiary, which was 20,000 Rand. And we will take that to a separate line, which is investment in subsidiary of 80,000. Then we went to the middle part and we took that and we went and we showed that separately under current assets. And we said, because we are holding it for speculative purposes, they say there, for speculative purposes. For speculative purposes. It means it's held for trading, and therefore IFRS 9, ISA 32, IFRS 7, all those IFRSs that deals with financial assets and financial liabilities and financial instruments. Will classify this as held for trading, and it will be a current asset. So we take it out of that 136 and we go show it separately. 46. And then we went further and we said, but that last one is a separate financial investment. And we show it separately as 30,000. So they tested, they test your knowledge on how to disclose this information. Harry, are you happy with that explanation?
Yes, I'm happy, Charles.
Okay.
Thanks.
Thanks, Harry. Guys, if there's no more questions, that concludes tonight's session. As I've said with the previous module, because there's 7 modules that I'm assisting with, I will try and see if we can squeeze in another session over the weekend, but that will probably only be communicated over the WhatsApp. So make sure that you have the WhatsApp number. If you don't, please make sure that you indicate that you don't have it, and then I can post it again, but I think I'll post it again in any way. Where's that? Copy. So I've posted the evaluation form in the chat section as well as the WhatsApp number just now. If you guys can please complete the evaluation form. It's very short and it will assist us a lot, as well as then for your own benefit, if you want to, it's voluntary, you can send your name and module code to that number. Guys, if there's no more questions, I will quickly do the, I'll finish up that solution, save it as PDF, and I will put it in the group. You guys must have a lovely evening. Remember to post your student number before you leave. If you haven't done so already, please complete the evaluation form and then send your name and module code to that number if you want to be part of the WhatsApp group.
Thank you very much, Charles.
Thanks, Harry. Thanks, everyone. Have a great evening. And then
Thanks, Charles.
Thanks, Charles.
until we speak again.
Okay,
Thanks.
cheers.
Thank you,
Charles.
Bye-bye, guys.
Thanks.
Bye.
Bye.
Bye-bye.